Hi everyone, this is a technical analysis on the Russell 2000. Let's start with some fundamental background first. The Russell 2000 sell-off has been remarkable, with key levels being breached with no hesitation as the sentiment turned negative. The reason for the sell-off is unclear, as the US data has been supporting the soft landing narrative, but the sharp slowdown in the Chinese economy is expected to infect the other advanced economies and drag the global economy down. Moreover, the quick rise in the long-term Treasury yields is also tightening financial conditions, with real yields approaching the levels last seen during the global financial crisis of 2008. It's a tougher environment for sure, so the technicals will be very helpful in managing the risk. On the daily chart, we can see that the Russell 2000 eventually breached the 1920 support zone and extended the sell-off towards the next support area around the 1820. This is where we can expect the buyers to step in with a defined risk below the level and target a rally into the 1920 zone. If the price breaks below the 1820 support without a pullback, then we will likely see the sellers piling in even more aggressively and extend the fall into the 1720 level. Drilling down to the 4-hour chart, we can see that we have a strong downward trend line here that acted as resistance almost perfectly in many occasions. If we get a bigger pullback, the sellers will be leaning on the trend line again with a fine risk above it and target a break below the 1820 support zone. On the 1-hour chart, we can see that we had a divergence here with the MACD right when the price was falling into the 1820 support. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, the break above the most recent swing high point here is pointing to a correction towards the trend line, where we can also find the 50% Fibonacci retracement level. In fact, we can expect the buyers piling in here with a defined risk below the level to target the trend line. If the price falls back below the swing level, the sellers are likely to jump on board and extend the fall into the 1820 level. This week is pretty empty on the data front, with just the US PMI scheduled for Wednesday and the US jobless claims for Thursday. We seem to be at a point where good news is bad news because of the Fed stance, and bad news is bad news because the slowdown in global growth will lead to a recession in many countries, including the US. Remember also that it's the Jackson Hole Symposium week, so we will get comments from Fed officials again, and especially Fed Chair Powell, who is scheduled to speak on Friday.